Hello and welcome to the results overview for Granules India Limited for Q2 FY19. Let us look at the P&L numbers for Granules. Revenues have grown at a very healthy rate of 46%. However, EBITDA has grown at a slower rate of 25%. The impact of this can be seen in EBITDA margins in the graph on the right hand side. The EBITDA margins are down by 300 basis points. Management attributes the slower EBITDA growth to two factors. A. The rise in raw material costs leading to higher expenses and lower EBITDA. And B. The US FDA approval to export APIs from the new plant has not yet been received. So the company is forced to sell its APIs from new plants in India, which generates lower margins, which impacts EBITDA. PAT has grown impressively at 49%. But then again, one can always play around with lower depreciation or deferred taxes. So I'm not really uh, taking the PAT on the face value. Talking about the EPS, Q2 FY19 saw the EPS grow at a very good rate of 35%. EPS growth is not in line with the profit growth though. In FY19, the company has paused its capex, that is helping it to show better P&L numbers. So let us look at the numbers for the first half of FY19. The revenues have grown at a very decent rate of 34% and the profits have grown at an even better rate of 45%. At this rate, Granule should show decent growth by the time we reach the end of this financial year. The EPS growth at 31% is pretty decent as well. With regards to the contributors to the revenue, I would like to bring to your notice the steady increase in the share of formulations. As we can see in the graph on the left, over the past 5 years, formulations have grown from about 33% to about 45%. Since these are high margin products, they bring in more profits. Even in absolute number terms, as we can see on the graph on the right hand side, we see a 14% growth in formulations year on year. The second interesting aspect to note is the steady decline in API sales, followed by a spurt in Q2 FY19. This is predominantly because the company started to sell APIs from its recently opened facilities in FY19. This has led to their increased contribution. If and when the company starts to make formulations out of these new APIs, the share of formulation should further go up and the contribution of API should come down in future. In absolute number terms as well, please refer to the graph on the right, we see that the company has increased API sales from 5,192 metric tons to 6,344 metric tons, which is a growth of about 22%. Again, this substantial increase is predominantly because of the new API facilities. Regarding the sale of PFI, one need not worry about this as of now. Part of the PFI generally gets consumed in the preparation of formulations itself. This does not get captured or depicted here. Hence, captive consumption gets masked in such results. Granules has substantial expenses in the form of raw material costs. If the revenue grew by 46%, the raw material costs have grown by 57%. Management has informed that they pass on the rise in raw material costs to customers, but there is generally a time lag of a quarter or two to get this reflected. Employee expenses has seen a modest rise. Surprisingly, the finance costs are down by 27%. in spite of the fact that there is no major change in total borrowings by the company. This is a puzzle to me. Other expenses have seen a substantial jump as well. Management attributes this to two reasons. A. In financial year 19, the company is is actually expensing most of its R&D expenses to the P&L compared to what it was doing till FY18. And B, there was a provisioning done for a bad debt to the tune of 5 crores. There was no further information on whom this money was lent to. The graph on the right shows the expenses as a percentage of revenue. Clearly, the rise in raw material prices are showing an impact. Raw material now eat up close to 60% of the revenue. If this needs to come down, then the contribution of formulations or fixed dosages has to increase further, and the company needs to export the APIs from the new plant to developed nations as early as possible. The loan numbers are rather interesting. The company has most of its loans in foreign denomination. Over the past 7 quarters, there has been a steady increase in the total borrowings, and in rupee terms, it stands at 1,120 crores as of Q2 FY19. By FY20, the company plans to repay close to 200 crores and reduce its loans to about 900 crores. This was an abridged analysis of the Q2 FY19 results for Granules. There is more to the analysis of Q2 FY19 results that includes molecule-wise breakup, performance of the Omnichem JV and Biocause JV, US facilities that is Granule USA and Granules Pharma Inc., details on the upcoming oncology facility, further details on any capex, details on loan repayments in Q2 FY19, and plan for reducing the loans in future. Please visit investing.amitkirti.com. Thanks for listening.